It's the end of May, and unsold inventory on the market is increasing across the country. Every state in the country now has more homes on the market than a year ago. In many places, we're seeing new construction get completed and adding to inventory. So it's not just resale inventory growing. There are more homes on the market now than any time since August 2020. We'll probably peak around 700,000 homes this summer and cross over that 2020 level at that point. New listings climbed for the week, 72,000 single-family homes newly on the market. I thought we might be in decline already with the new listings volume, but that pace picked up a tad this week, so that's encouraging to me. I like signals of more sellers. More people coming off the sidelines is healthier for this market. We have to keep watching the sales rate too, of course. We don't want a scenario where there's like a flood of sellers but no buyers, so it was encouraging that the new pendings ticked up just a bit this week after having declined for several weeks in a row. But that's why at Altos, we track every home for sale in the country every week. The data so often defies expectations and changes very quickly. So at Altos Research, we track all the pricing, all the supply and the demand, all the changes in that data, all the sales, so you can understand it immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's look at the details of the U.S. real estate market as of the end of May 2024. So there are 595,000 single-family homes unsold on the market now. That's up almost 3% on the week and 37% more homes unsold on the market now than last year at this time, 37% more. Every state in the country now has more unsold inventory than a year ago. And some states like New York are only a fraction more homes unsold than a year ago. Some states like Florida are like 65% more homes on the market now than a year ago. But basically everywhere in the country, inventory is climbing. It's still climbing this summer as mortgage rates are still around 7%. Higher rates creates more inventory. Rates have eased down in the last couple of weeks, maybe sneaking back under 7%. And we've had this trend with expanding inventory. These are, the homes on the market unsold. That's been building all year. That trend will continue until mortgage rates drop notably. Is that happening now? Maybe. With nearly 600,000 homes on the market, that's more than any time, as I said, since 2020 at the start of the pandemic. In a few weeks, probably early July, the inventory will surpass the 2020 levels, and inventory will peak in the late summer, then it'll crest for the year and finish 2024 with about 620,000 single-family homes on the market, which would be 20% more than the year prior. In this chart, this inventory chart, you can see the dark red line illustrating the unsold inventory for 2024. You can see it's consistently trending higher. You can see how we'll cross over the gray 2020 line by July. You can also see the light red line from 2022. That's when rates were first skyrocketing. That's when inventory started climbing off the record lows during the pandemic. So 2022, inventory was building much more quickly than it is now. Rates were jumping and inventory was jumping. So it seems like maybe there's a chance that mortgage rates have finally started receding in the second half of the year. If mortgage rates fall substantially quickly, you'll see the slope of this year's line here level off as homebuyer demand picks up with affordability. I would expect that demand to be very notable with rates around 6.5% for the 30-year fixed. So keep an eye out for that level. There were 72,000 new listings this week. That's up several percent over last week and the most new sellers of any week all year. This is good. It's a reversal from what I assumed last week, though. Seller volume had been inching down for 3 weeks in a row, and it looked like we'd passed the peak of new listings rate for the year, but this week it jumped. And like I've said, I like any sign of growing seller volume to help this market. Most year's new listings volume peaks in the second quarter. So, hopefully we'll get a little more runway before the new listings volume tapers off in the second half of the year. So there were 72,000 new listings unsold and another 18,000 listings that are already in contract, the 18,000 immediate sales. So that makes 90,000 total sellers this week and is 10% more than a year ago, 10% more sellers than a year ago. But in 2022, there were 108,000 new listings in that week. So this is important context because it helps us see that the total home sales will necessarily be capped. There just aren't enough sellers yet. 90,000 new listings this week versus 108,000 2 years ago. 20% fewer now. But the seller volume is growing. And that's why I say, the jump in sellers is good. Any growth in the market is good from this incredibly restricted pace that we've been on. The three big states, Texas, Florida, and California, all have about 20% more new listings each week than a year ago. So the South has been leading that inventory growth all year, but California is picking up pretty quickly. So that's something to keep a watch on. There are 404,000 single-family homes in contract now. That's up almost 1% from last week and about 1.25% more than a year ago. A few thousand more homes are in contract to close in June than there were a year ago, just a few thousand. There were 68,000 new contracts started this week. That's up almost 1% from last week and 4% more than a year ago. So it's nice to see new contracts tick up this week, though it looks like April might have been the peak for that measure of home sales. So the peak for the year so far was a few weeks ago. We had 78,000 new contracts started in a week versus 72K this week. So we'll get a couple of more weeks in June with contracts potentially growing before the market recedes after the July 4th holiday. There's usually a spike in offers that happens in June before the holiday. So hopefully we'll see that this month. So in this chart, each bar is a week. The taller the bar, the more homes are selling. So these 404,000 single-family homes are in contract now. And these are sales that will mostly close in June. The light portion of the bar here are the new contracts started each week. And it's nice to see that light portion, the new sales portion, grow. And we've added the dotted line so you can see where the market is compared to last year at this time. And right now, it's just a tiny, tiny bit of growth. Now, the 34.8% of the homes on the market have taken price cuts. That's up 40 basis points from last week. It's about 450 basis points above last year at this time. So last year's barely 30% of the market. Now it's almost 35% of the market has had price cuts. So not only are price cuts elevated compared to last year, each week more price cuts are happening than last year at this time. As inventory has built, demand slowed with higher mortgage rates this year. The houses sitting on the market need to cut their asking prices. So it's normal for every market to have price cuts. But as more than a third of listings have to cut their prices, or as this trend line approaches 40%, which is the path we can see now, that's really indicative of continually slowing demand. You could imagine by July, we have more than 40% of the homes on the market with price cuts. That'd be a bearish indicator for future sales prices. And in this chart, if you follow the slope of the dark red line up for another month or two, you'll see how the market may approach 40%. So these are leading indicators for sales that will happen in the future, a few months out in the future. And mortgage rates can change the trajectory of this trend. Price cuts are elevated this spring because rates have stayed higher for longer. If rates drop substantially, you'll see a subsequent pickup in homebuyer demand, and it'll show up in this stat with fewer price cuts. So keep a lookout for that. Since price reductions are a leading indicator for future sales prices, I'm watching all the price signals to see if home prices are yet showing weakness. And while I've been sharing for a few weeks now that it looks like there is weakness in the future, most of the home price measures do not yet show receding price growth. So most of the indicators are still showing 3 to 4% home price growth over last year. We're keeping our eyes out for whether these measures are trending lower, maybe a tad lower from 5 to 4 to 3%, but it's not really clear yet. It's worth watching. So the median price of all single-family homes in the U.S. on the market now is $454,000. That's up almost 1% for the week. And like I said, it's just a touch more than last year. The median price of the homes in contract, which is $400,000. And it's still, like I said, about 4% more than a year ago, a little under 4%, almost 4% more than a year ago. So I'm showing those pendings here. That's the dark line is this year. These are like all the homes that are in escrow right now. These are the sales that will mostly close in June. So we can see that they're, almost 4% more expensive than last year at this time. And you'll see in the chart how home sales cluster around these big numbers. So the median price of the pendings has been basically at $400K for about 8 weeks now. You can see that long stretch at 375 in the light red line in 2022 as well. So since sales cluster around the big numbers, the median is the middle of all the numbers, it's more likely that the median is going to be the same number for several weeks in a row. And right now we're at 400K. You can also see in this chart how we're probably at peak pricing for the year. Starting in June or really July, prices will start ticking down for the second half of the year. I'm watching this chart of pending home sales prices because this is the earliest proxy for sales that will close in the future. And in 2022, it was a really clear signal of when prices were falling sequentially. You can see the gray zones here that we've highlighted for you. In June and again in October 22, we could see very clearly the effect of those rapidly rising interest rates at the time. So I'm watching for that again now. And here's the thing, right? It seems like maybe we're finally past the peak mortgage rate. Rates have been inching downward. The latest inflation data came in positive. So the question is, at what level is buyer demand stimulated? And does that impact prices? Or if inflation surprises the other way and mortgage rates rise again, how quickly does that impact home prices? It'll be quick, and we'll see it right here. So, and that's why we do this work each week, right? The market is trying to grow. Home buyers are obviously sensitive to the cost of money. If you're not watching the data each week, you're probably behind the curve. You have buyers and sellers who have no idea how this market is behaving right now. So they need to hear the data from you. And if you need to help buyers and sellers see the actual data, you should join us at Altos. Go to altosresearch.com. Book a free consult with our team. We'll help you know how to talk about the data with your buyers and sellers, your clients and prospects. And we'll look at your local market with you today. So there's a link in the description below. Click that to join us and let's get started. Thanks, everybody.